Dave Ramsey has had some pointed things to say about you final expense agents out there, and in this video I'm going to show you what Dave Ramsey himself thinks about final expense whole life insurance, and I'm going to tell you why he's wrong. Greetings and salutations. My name is David Duford. I own Duford Insurance Group, where I train and recruit agents nationally to sell final expense Medicare, annuities, and ACA health insurance. If you'd like more information about joining Duford Insurance Group, go to davidduford.com/FAQ. So I was browsing YouTube the other day looking for new content ideas for my YouTube channel when I ran across a Dave Ramsey video of him saying why whole life insurance is a bad idea to sell. I watched the whole video and I thought, man, this is so out of whack and so ignorant, really, of understanding the market, that I wanted to do a review and reaction video so I could show you kind of what Dave Ramsey thinks and in what ways in this instance Mr. Ramsey is wrong in his perception about final expense insurance. So the purpose of this video is to really give you some proper perspective of why final expense insurance is unique, whether you think whole life is trash value or you only would sell term or you think term's a better product, and why it's a good product to sell in a lot of different circumstances. And hopefully by the end of this, you can make your own mind up if you think this is valid or not. But I want to, again, provide that part of that's really frustrating about listening to some of these videos with Dave, which is the lack of perspective and context with really understanding what he's talking about. So what we're going to do is we're going to go over to my screen, we're going to play the video, and then at certain intervals, I'm going to pause, we're going to analyze and talk about what we heard, again, with the whole idea of helping you understand better of what Dave's talking about and really why in this case I think he's wrong.
Yeah, first my question, and I'll fill in a couple blanks. I am getting ready to go into a new field. It's life insurance. I'm getting ready to take my state exam. I've been studying for the last month. And this is final expense insurance. And I'd recently heard on one of your shows you kind of had spoken against whole life insurance. This is really a brand new landscape for me, so I really don't have a lot of frame of reference. I guess I just want to make sure I'm getting into something that's, noteworthy and, going to be something I can stand behind. The insurance company I'm getting ready to pair with is called Lincoln Heritage.
So a little commentary here. If you're brand new, if you're maybe not interested in insurance, you're just watching this because you see and you watch Dave Ramsey material. If you're looking to sell, Final Expense is a product designed to offer whole life insurance, which never cancels due to age or health, which rates never go up, and if the client qualifies, provides first day full coverage from the first payment. The concept behind the product is that it provides guarantees that the death benefit, the amount of coverage, will pay out to the beneficiary when the client dies, regardless of how old or how unhealthy the insured gets. It's predominantly sold in the context of burial insurance in increments of $5,000, $10,000, $15,000, depends on how much the client wants, whether it's burial, cremation, added money when they pass away. But the purpose of it is to match the need with a product that meets it, right? That's the problem, which why we don't sell term insurance a lot of time for burial insurance, because the problem with term insurance is that it terminates. There is a very real risk you could outlive it and not have anything to show for it. And it also is very helpful in the sense Final Expense provides opportunities for insurance, even if the client has problems with their health. A lot of people who apply for Final Expense could not get term insurance as well because their health is so bad. We'll probably talk more about that in a little bit. With that said, let's continue on and see what Dave has to say.
This is a decision you have to make. You don't make it because I said to. You've got to gather facts.
Sure.
But you're calling me and saying it bothered you that I tell people not to buy whole life and you're signed up to become a salesman for it, so that's throwing you off.
Well, I guess it's industrial life, right? Because it's final expense insurance. So I don't know if it's one and the same. I have no idea.
Yeah, so what this gentleman is saying here is the idea of what Dave usually talks about would be these dividend investment grade, as some agents will call it, whole life plans that are designed to develop a tax-free income later in life. And a lot of what David talks about is the idea that you're better off putting that money, or at least part of that money you would put in a whole life, into a term insurance plan and then invest the difference, right? Which is a great strategy. But the point Ruben's making here is what we're talking about in Final Expense is entirely different. Most of the people who buy those whole life plans are generally younger, they're still working, and they're healthy. And the idea is many years in the future having some sort of tax-free income in many of these strategies like Bank on Yourself. But what we're talking about in the final expense market generally are people who are retired, who are disabled, probably 90% of the clients out there who purchase this, and their health is so bad that they wouldn't be able to qualify for those whole life plans or the term insurance options as well. So this is a different market. And I say this because a lot of the people who are zealots for term, like it's the only thing out there and everything else is garbage, they don't understand that not all people are in the same mode of life as they are. And this is why this is a lot different. I think there's some much important context that we need to say right now before we go any further to understand what the purpose and utility behind that product is. This is not like a lot of the times Northwestern Mutual or New York Life, like Dave maybe doesn't specifically talk about, but the products they sell, he kind of poo-poos on for his reasons, which definitely have a good valid point. So there is definitely a difference, okay?
Whole life traditional cash value insurance is 20 times more expensive for the same amount of coverage of life insurance. And so let's say you were going to buy a $200,000 policy. If it was $100 a month for whole life, it would be $5 a month for term insurance.
So what he's saying here, and he's definitely got a point, is the idea behind whole life strictly is thought of as an insurance product that pays a death benefit. And again, it's not a completely fair and objective analysis because there's a lot more that goes into whole life beyond just the death benefit, the cash value, what it does for you, etc. But strictly looking at the cost basis of what you're going to get per dollar of coverage, term insurance is going to get more in death benefit coverage than whole life. But here's the problem. This presumes a lot of things very dangerously. Number one, that the client can qualify for the term insurance. Again, we talked about earlier that the client many times is older, elderly, cannot qualify for coverage. They're not going to have that much time or money to save for a funeral. So the problem gets a little bit murky when you actually provide some context. Again, I grant Dave every 100% perspective here is right for people who are in their 30s or 40s who want to save money, who want to invest, who want to have a safe and comfortable retirement. But this is not the market and the thought process for somebody who buys final expense. They're generally paycheck to paycheck. They don't have the ability to save long enough because they're so close to death that they may not be in a position to have saved enough. And many of the times the family's not in good financial position either. It's something that may be shafted to the county government to pay for. So now it becomes a cost burden for the taxpayer. So again, this is the perspective that's lacking here when you have an all-out negative view of anything that says whole life without the context of why it would be sold in the first place. A couple other things. Yeah, you could possibly buy a term policy, but what happens if you start looking at prices? Even if they're in good shape, the price starts to go up precipitously as you start to apply 10-year, 15, 20-year terms to somebody who's in their 60s or 70s, and the price basis will probably be equivalent or not that much off from something that permanently is in place that doesn't run the risk of cancellation. Again, why does somebody want to buy whole life final expense insurance? Because they don't have the money to save, or they're questioning of the time that they may have to save. So they want a guaranteed death benefit regardless of when death happens because they know they don't have the capability or their family has the capability to pay for that debt. And term doesn't do that. There is always that risk of outliving it. And frankly, that's how those products are designed. They're designed to cancel because it's protection in case death occurs earlier than expected. But that's an unusual circumstance for somebody who's in their 60s because the likelihood's much higher they'll die into their 80s if they're generally healthy even. So terms becomes very prohibitively expensive.
Now, where does the other $95 go? Well, it goes to build up this cash value inside the policy. It's a savings account inside the policy. In and of itself, that's not a bad problem, except that the fees are ridiculous in the whole life world. Now, I don't know the particular product you're selling, but the typical whole life policy.
Again, he admits he doesn't know the product, but he's giving you advice on how to sell it. You know, it's like me going out there and saying, I don't know, talking about investment stuff, right? I don't have an investment license, so I don't give advice for that, right? So this is one of those things where it's like, okay, there's obviously a limitation of perspective here, so take what he says with a grain of salt.
Well, see, the first 3 years, your cash value buildup is zero.
And what Dave says here is 100% true, at least for final expense plans. It is not, but it's not designed for cash value. It does accumulate a cash value. But the idea behind final expense is to offer a simplified way to get coverage despite health issues, so the death benefit can be paid. Again, why would you get that? Because you don't have the time or the capability in time to save enough for a funeral expense. And the worst case scenario, it's padded off to beneficiaries or kids or spouses that don't have the money either.
And so this is like going down to the bank and opening a savings account that the first 3 years you put money in it, they keep your money. After that, they give you a lousy rate of return, and when you die, they keep your money.
But this is not the case with final expense. This is not an investment account. This is again, not the purpose why you buy final expense. You do it because somebody's going to die and not have the money to pay for it. Again, it's not about the cash value. It's about the death benefit that you otherwise couldn't get either by saving or even qualifying for a term. Or maybe you don't even think term's good because what if you outlive it and there's nothing there to show?
It's a horrible way to save money. And so
horrible way to save money. Again, in the context of somebody who's in their 30s or 40s, perhaps, right? You could put your money into an index fund and do that for several decades and get compound interest, right? So there's definitely an argument to make there. But the problem we have with somebody in their 60s or 70s who makes $1,000, $1,500 a month, maybe even less than $1,000 a month, is once all is said and done with their income and their expenses, there's very little left to show. And yes, they could put that money aside, and they could put it into an index fund, but the problem is they don't have the time that's required for these returns on average to accumulate like somebody in their 20s or 30s or even 40s. So it becomes a question of, is it a smarter idea to save when I could die at any time and I'm closer statistically to death? Or is it better to get a whole life plan that accounts for that if the fact is I live shorter than I want to? So again, different scenario than thinking of it in an investment way, which Dave's the one that's brought it up several times, so that's where his thinking lies.
Consequently, the people that you're talking about going to work for hate me with a vengeance because I tell people not to buy what they sell every day and have for 30 years.
And the problem that they hate you, I don't think they hate you, they just don't like it when you say something out of context without having some kind of idea of how it works. Now, granted, I'm sure people who would say that who work at the organizations that sell the kind of whole life you're saying this is, but it isn't. But for those of us out there in the final expense world, when we hear you say this stuff, it's apparently obvious to us that you have no clue what you're talking about. And the problem with that is you're endangering people who absolutely need this kind of coverage that otherwise couldn't get term insurance, investments, and have the time like you say they should because their age is too old, because their health is too bad, or because they just financially can't do it. That's what frustrates us more than anything, because you're in the position that many of us would love to have, this ability to talk to the public about important matters like financial advice and saving money, etc. And you're doing good work, but stuff like this, at least have a little bit more understanding before you purport to know what you're talking about.
Yeah, the particular product that you're in or that company I'm not even familiar with, but I'll guarantee you.
Again, I don't know what you're talking about. I have no idea what you're saying, but I'm going to give you advice anyway.
Their face is going to turn inside out and explode when you just mention the name Dave Ramsey. So don't mention it because it won't do any good. We don't want anybody's head exploding.
I'm not going to make friends like that.
Yeah,
right?
It's not. If you're going to quit, just quit. Do it with class. You don't have to go in there and try to change them. You're not going to change them. They're going to keep doing it. They've been doing.
That's kind of how we think too. Sometimes listening to your material, again, there's that lack of context, right? When you have, and this is kind of a greater issue I have, like life insurance. It's not a matter of zealousness, right? Like they're just tools for certain circumstances. Everybody's going to have an opinion. Is it good, bad, or ugly? Everybody's going to have different perspectives. But the true professionals out there that help people day to day in the insurance world don't look at one product being the pinnacle of achievement, that you can only sell this product and everything else is garbage. That's stinking thinking. A.L. Williams said that back in the day. Every product has a purpose and reason to have it. And it's just a tool in a tool bag. The whole life is not trash. Term life isn't trash. I sell both. But what comes down to the deciding point on what a good salesperson will sell is what's in the best interest of the client and what is it that they want to accomplish and what product is going to do the best job of that. Yes, obviously there's agents that push garbage out there for sure, but there's agents who honestly want to help their clients and look at the options and try to pick what works best for them. Again, nobody here is mad at Dave Ramsey because you're like, yelling at them to stop their scam and they're mad about it. It's because there's a lack of context and conversation to really realize that there's more at play than just whole life bad, term life good. It's more complex than that.
You're better off putting it in a fruit jar in the backyard. At least the family can find it and it's there when you die.
Yeah, the problem with that is that if you tell that to a 70-year-old lady who makes $1,000 or $1,200 a month from Social Security, and she ends up with maybe $50 a month left over, and she lives 5 years, that's $50 times 12, that's $600 times 5 years is $3,000. $3,000 does not cover a funeral, Dave. It barely covers enough to cover a cremation, Dave. So you're in this position where your advice, yes, you got the money there, but you don't have nearly as much to cover what the true cost of burial are. And now you've just recommended a family who probably doesn't have the money as well come up, fight, and argue about how they're going to cover the expenses. This is not good advice, and it's not helping the people that really do need this kind of product.
Yeah, it's trying to be investing and insurance at the same time, and it's terrible at both at the end of the day. So if I'm selling this thing, I'm going to have a moral problem knowing how much I know. So
Yeah, so you don't know what you're talking about, dude. That's your problem. I don't know who you are, but you're saying, well, I'm going to have a moral problem. You don't even understand the argument. We're not talking about investments here. Final expense is not investing. What, you're going to sell a Mildred a term insurance plan for 10 years and she can't even qualify for it? I remember I did a consulting job for a big agency that sells a lot of term. And over 70% of the business that they place never gets placed on people who buy term in their 60s. 70%. It's either gets rated up or they're unqualified. Is that morally the righteous way to go, right? Your morals are so strong that you won't even get them a whole life policy to cover their final expenses? Come on, people.
ignorance was bliss.
Ignorance is bliss. Kettle, meat pot.
I think he can find a better job out there if he loves sales, if he even loves insurance. That's a noble thing to sell, but not whole life.
Again, man, this is my problem with these people. This is always the issue with these gurus, man, is they don't give any context. They're running a show. They've got a position they keep, but there's always nuanced looks at life. Life is not black and white. There's always gray in between. And taking this like simplified, ignorant perspective, well, now he's got this education. Guys don't even know what he's talking about. And now he's going to say that, oh, he should sell anything, but not this. Again, you guys decide for yourself, but listen to this, just as ridiculous.
I would stay away. And these companies are like a Northwestern, you know, it's your buddies from college that want to make a big commission off of you.
Yeah.
Stay away. That's right. Make sure that elderly people who cannot qualify for term insurance stay away from these companies like Lincoln Heritage and others who do a good job and help people nationally with something that, frankly, if they didn't have, would die and have a huge bill left to their loved ones. Again, stinking thinking. The idea of getting term insurance regardless of the circumstances without understanding the perspective. This is a problem that these people present. I grant them, they probably do an excellent job most of the time. I probably agree a lot with what they say. But in this instance, this is the frustrating thing that when people in positions of power, they have a responsibility to, when they don't understand things, to make sure that's expressed or take the time to understand the perspective before they give advice or direction. And the sad thing is Ruben probably trusts this guy more than he trusts me or anybody else in the final expense plan, business, and might be walking away from a position where he has a heart to help people and really could, but won't because somebody says whole life bad, whole life always bad, term life's the only thing that's good.
And again, I tell you never to buy it, and so and I know I'm kind of bursting your bubble in the middle.
Again, never to buy it, never, ever, ever. Is that anything always that bad all the time to not even look at alternatives? Again, black and white thinking.
Having this whole recovery journey and everything, and I don't want to do that. I want to say you're a hero. I'm proud of you. You and I are going to be friends even if you decide to work there. So I'm just, you stay with it, buddy. But hang on. Kelly will get you the book for Ken Coleman, and we'll get you signed up for Ramsey Plus. I'm not charging you a thing for any of this, and I'm not going to keep your money when you...
So wrapping this up, ladies and gentlemen, look, this is how it works. This is what sometimes happens. This is the frustrating part of our business, is when people in high status positions who have worked hard and helped a lot of people start giving advice that just frankly is incomplete. Again, Dave does an excellent job most of the time. But when you start making judgments and perspectives like this, and with audiences of millions of people that look to him solely for advice and direction, you misguide lots of people who absolutely need this. So it's frustrating to hear this, and I figured I wanted to put this out there because maybe some of y'all heard this or think whole life is bad, but you don't understand everything in life is not black and white. It is not just good and evil. There is sometimes middle ground here, guys, and you have to have a little brain power to work around it. And unfortunately, Dave has this perspective that's antiquated, that's too simplistic, and it does a disservice to millions. And there are millions of people in this position where they need coverage but can't qualify for term, can't afford term, and want something permanent because they're not at a point in their life where they'll have the money to survive. So that's what I think. Tell me what you think about in the comments below. Hope you enjoyed this video. See you next time.